But let's get a bit of a view on commodities, because it's such a key issue at the moment. Peter McGuire from XM joins us now out of our Sydney CBD studio. Peter, pleasure to have you on the program. Wow, what a move for oil overnight. Of course, an 8% move. Look, whether it can last is a question, because I think we're already seeing signs of a pullback today. I mean, is this a one-off rally for oil? How do you view the situation?
Well, good afternoon, Ingrid. I'll tell you what, it was certainly one hell of a night. How do you view it? We're back at Monday's prices. I'm not sure what happens tonight. I'm going to see what, we've had a wonderful day. Australia's well up. The Nikkei's up incredibly strong out of Tokyo. So if we can keep the momentum running into Europe tonight and then see what happens as far as New York in about, 8 or 9 hours, then that's going to set us up for the rest of the weekend. I'm not sure whether you're going to see it just, hold at these sort of numbers or a little bit of profit taking from last night. But, it's absolutely extraordinary on every front. When you look at crude and you look at the Dow, it was one night to remember.
When you look at sort of volatility and the theme of volatility in global markets, which is what we're seeing right now, I mean, a 1,000-point swing in the Dow overnight after having, its worst Christmas Eve sort of market in many, many years. What's your take on, I guess, how that plays into commodities and how that plays into oil?
Well, when you look at the Dow, first off, if you see that, it's the second worst month, December, since 1931. That's in history, so that gives us some sort of indication. Then we see it bid up last night to a record number that you've never seen before, so there's a momentous occasion. What happens as far as energy? That was incredibly sold off. When you're thinking of where the market was at the early parts of October, we're talking, are we going to hit 95, $100 a barrel? Everyone's talking it up, and then all of a sudden you whip 40% of it out. So I think it'll hold these sort of numbers. Unless you see something dramatic happen geopolitically, I think it's going to hold this sort of, that 45 to 55 range. I know it's broad, but I think there's nothing really to take it above that or below that at the present. But if we see a further washout as far as equities, then that's going to really take a lot of the steam out of the energy market and probably, might strip another $6 or $7 out.
How much is OPEC playing in on it? I mean, we know we obviously saw OPEC cut production last year. I mean, well, this year, I should say, the last meeting we saw. But next year, what's in store for OPEC? I mean, do you have a forecast for how you expect it to play out? And how much, I guess, sway does OPEC have now that we're seeing so much supply coming out of the United States?
Well, it's still a very strong body, and I mean, there's OPEC Plus now, and I was there at the OPEC meeting on 175th. That was on Thursday, the 6th of December in Vienna. Yeah, they pulled 1.2, 1.3 million barrels out. That'll come into play from the 1st of January, Ingrid. But the thing is, now, and put your mind to this one, the Saudi, as far as they're, and they're the powerhouse in the OPEC member, and Russia, of course, but the Saudis, they need $95 a barrel or approximate to balance their budget for 2019. Now, you can imagine how hemorrhaged they're going to be at $45 to $50 and what impact that has for the long run over the next year and a half to 2 years and the possible IPO. So, of Saudi Aramco, which is touted to be the largest in history. So we're not sure whether that's going to actually come to market and where does the energy markets play at this sort of level. But we're shooting now through 100 million barrels a day as far as consumption, and I don't think that storyline's going away anytime soon.
What else are you watching in the commodity space at the moment? Dr. Copper doing pretty well overnight as well. It is obviously a big factor when it comes to sort of reflecting a barometer of economic growth and what's expected, given we know economic growth is probably going to deteriorate a little bit, at least in 2019, if not a lot, if you're some economists. How do you expect copper to track?
Well, I think it'll possibly edge higher, but again, it's going to be what happens as far as the global position, what happens as far as these trade talks in China and US, and where does that play over the first half of the next quarter. I think really up till that mid-February period, Ingrid, it's going to be incredibly volatile because you'll wrap up that as well and take on board Brexit, take on board the French, and take on board Italian bonds. So. And then think about where China is. They've wiped out $3 trillion of value from their stock market in the last 11 months. So I'm conscious of where copper plays, but I've also got those big issues happening, and that's without any, throwing any geopolitics in there as far as the President Trump removing his troops from Syria. So it's going to be a little bit of a wait and see over that, the coming weeks. But I think, the markets could possibly edge up a little bit higher from here.
Well, on that, gold. What's your take on gold?
Well, we had 4 rate rises this year in the Fed, and gold's now at 12.72. Now, what's going to happen? I'd like to, I'd like to see a consensus out there. First off, are we going to see one rate rise next year from the Fed, 2 or 3, or are we going to see a rate reduction? There's even, I saw something over in the last matter of an hour or two, 50% chance from Oppenheimer saying that there's going to be a rate cut in 2019, not a rate rise. So that gives us an idea as far as, mixed views for the Fed. The US dollar's well bid up. It's up around about 10 or 11% since February, March, April. And gold has had a nice little rally to the upside. I think there's fear coming into the market if the stock market rallies to the downside, or it has a further little bit of a correction, more heat comes out of it, then I'm sure that'll bid gold up. It'll be a 13.20, 13.30 play in the short run. So that's where I'm thinking.
All right, well, moving on from that, and I guess it all relates, doesn't it? Currency markets. Just want to get your view on that as well, Peter, going into 2019, because obviously the pound very much in focus given what's going on with Brexit and the constant rumblings there, which, you'd hope would come to an end come March, but don't know if that'll be the case. What's your take on sort of the key currencies to watch heading into 2019?
Well, leading into that pound one, Ingrid, I was in London a couple of weeks back, and I'll tell you what, the man on the street, woman on the street, I think first off, they're over it. Secondly, they're not sure how it's going to happen. Is it going to be hard? Is it going to be soft? Is it going to be what's happening as the backstop as far as Ireland? And all of those issues, we're going to have another referendum. Is it going to be 2 out of 3? So, no one's really sure, but the countdown's on till the 31st of March. That's a given. So I think that if Theresa May gets some support and things go her way, I think that'll bid the pound up and it'll be a very strong move to the upside. If it doesn't work, I think it'll probably have further weakness. So there's that side of it. Euro is still in a bit of a state of shock. So I can't see anything dramatic happening there. And when you're looking at the big economies over there with France the way it is, and possibly even leaning into Germany, and then there's structural weakness. So I think it's going to be a fascinating time for currencies over the next, again, 6 to 8 weeks till we get some sort of clear understanding of what's going on in the big picture.
All right, well, Peter, we might leave it there with you, but there's a lot to watch. So thank you very much for joining us today.